Hey, my friend, welcome to this video on Bitcoin trading for beginners. Barry Burns here with TopDogTrading. And this is more of just a cautionary tale for beginners. I know that Bitcoin is very, very exciting for a lot of people right now. And so I just want to keep everything in perspective for especially beginning traders. One of the main things that I want to point out for beginning traders is the volatility. Very, very challenging volatility at times. So you've got to be aware of this because, yes, it's exciting, but with a lot of emotion in trading often comes a lot of volatility. And sometimes there can be some game playing there as well. So, for example, if we just use basic support resistance here, we look at this support level up here, and then we came down and we made this low over here. All right, so as we do this now, so the low of that range during this whole period of time, and this is just these are hours going by, not days. But we've got a little bit of a range-bound market. Now look what happens, and this is where, can't be sure exactly what's going on, but I'll tell you, it's suspicious because we break this low, then we go up and we break that high, and then we come right back into the range. So to me, that looks like a shakeout. And a shakeout is basically meaning that market makers, well, players in the market, whoever they may be, are looking to shake out the weak hands, as it's called. So people get very emotional, get worried when they see the price of whatever market they're trading, in this case, Bitcoin, going down. So people tend to do always the opposite of what they should do, right? So they, instead of buying low and selling high, they tend to get scared when the market goes and they sell. Then when it goes up, they get excited and they buy. And professionals know this, and so this is the kind of game that is often played. You'll not only see this in cryptocurrencies, you'll see it in other things as well. And then, of course, the market goes up from there. So I wouldn't be surprised, and this is just my own theorizing, but something to watch out for in the future, to keep in mind, that now that Bitcoin is being traded in Chicago and soon in New York with NASDAQ and so forth, gosh, it would not surprise me if the big players wanted to do a big shakeout. They wanted to drive the price of Bitcoin way lower. And the only reason that they would do that is to then jump in. So basically they short the market with a certain size. Then they come in with bigger size at the bottom to buy. They want to buy low, sell high, and so they move the market down. So, and they know that fear is a stronger emotion than greed. People freak out. They'll sell them all their Bitcoin or a lot of their Bitcoin, and that's the game. That's the game. So I don't know if that's going to happen or not, but in this kind of market environment, especially with something that's as an emotional market as Bitcoin, I mean, I'm thinking back in the real estate days. I'm thinking back in the tech days with the NASDAQ going crazy. Everybody thought they were an expert. Well, now everybody thinks they're a Bitcoin expert. But my warning is this. You've got to continue to still use good strategic trading principles. So here are 6 rules that are basic rules. There's many more that we could add, but for beginners, we'll give you these 6 today. So the first one is that when it comes to trading, very, very important to reverse engineer fear and greed. So just as I was talking about, fear is a stronger emotion than greed. When the market goes down and you're in and you see your P&L go down, people get scared. And, it's interesting. Warren Buffett did not take advantage of the technology boom. And everybody looked at him, just like a lot of people look at those who don't trade Bitcoin today and say, oh, you're missing out. And he just didn't want to play that game, And so, and I think we can all agree, he's done okay. He's not done bad. He's just fine financially. But he's a value investor. And so when blood is running in the streets, that's when he buys. But it's not just when things are going bad. It is that there has to be value there. And he's an expert at evaluating the value of companies. And so it takes a little education. Actually, it takes a lot of education to be able to do that. So that's one of the things. I remember after 9/11, my dad came into the market in a big way Well, the market went down dramatically. In fact, the markets closed after 9/11 for several days. And the markets had a bit of a crash. And my dad, being a professional investor, he saw that there was a lot of fear, and he came in and started buying. And so that's the way that people make real money. That's how the professionals do it. And that's why I said I'm a little concerned that maybe the professionals will do some market manipulation with Bitcoin, knowing that the average person is going to respond that way. You got to reverse engineer that if you want to be a professional trader, which means make money. Number two, don't get emotional about your trades. And Bitcoin's a great example of that because people are very, very emotional about it. Don't get emotional about Bitcoin. Don't get emotional about anything. Don't fall in love with any stock or company or futures contract. Nothing. None of these are your friends. We're here to make money. And you've got to stay objective about it. Number three is don't trade more than you can afford to lose. This is super important, and it helps with number two. One of the ways that you can aid in not getting emotional about your trades is to keep the money light. In other words, you don't want to put so much money into anything because you get overly excited about it, like Alan Greenspan talked about irrational exuberance. And then people put their whole life savings into it. Again, the real estate bubble. I know so many people, oh my gosh, they were all real estate experts during the real estate bubble. And oh, they were so smart and all that kind of stuff. Yeah, now they're poor. Now they're poor, just like with the tech bubble. They thought they were geniuses. They weren't geniuses at all. They had no clue what they were doing because they didn't live by professional trading rules. So I'm trying to keep you safe. So therefore, don't invest more than you can afford to lose, and that helps you maintain your emotion as well. People are always looking at, oh my gosh, fear of loss, right? Or fear of missing out, FOMO they call it, fear of missing out. That's an emotional thing. That is not how professional traders trade. So disregard the noise. That's another thing. People are trading using Twitter as an indicator, okay? Don't use Twitter as an indicator for Bitcoin. Most people don't know what the heck they're talking about. They're all big talkers. They've made some money, maybe because, they've invested in 100 different things that were all long shots, and they hit one. And so they won't tell you about the other 99, but they'll tell you about the one. And so then you think, oh, wow, this guy knows what he's talking about. No, he doesn't. Okay. But first of all, nobody knows the future, not even the smartest investor. Nobody knows the future. And so it's all about probability scenarios and risk management. So disregard the noise, forget what all the amateurs are saying, turn off your Twitter account, don't trade by Twitter. If there's somebody who's a really good professional trader and they know what they're doing, you want to follow them with a small amount of money, fine, cool. But there's a lot of noise out there, and you do not want to be distracted by it. Most of it is garbage from people who know nothing. They talk big, but they're not big. Have a sound, objective, rule-based methodology. Don't fly by the seat of your pants. Again, don't trade emotionally. Have a plan. Trading is a business, and just like any business, trading needs to have a business plan. We call it a trading plan, but it's got to be down in writing. It's got to be sound, based on good classic trading principles. Objective, so that you don't have to guess, well, what should I do now? No, it's in the business plan. That's what I do. And it's rule-based. So again, there's no question about it. You're not flying by the seat of your pants. And finally, the last one I'll mention today is using professional risk management and money management. Absolutely critical. You should never, ever blow out an account. There is no good reason. It just pains me so much when I get emails from people saying, yeah, I'm looking to, get into trading again. I was in it 10 years ago, 5 years ago, a year ago, whatever, and I blew up my account and I've saved up some money and wanted to see if you could help me. Kills me when I get emails like that. People have blown out their accounts. What that tells me is whoever they learned from either didn't teach them money management, or the person didn't follow the money management rules they were taught, because they don't think trading is about money management and risk management. They think it's about indicators, moving averages, candlestick patterns. Those things are fine. They're helpful sometimes if you learn how to really use them correctly and put them in proper perspective. But those don't really make you money. That's not what professional trading is really about. More important than all that stuff, it's based on a foundation of risk management and money management rules. Learn these. This is your foundation that will keep you safe, help preserve against drawdowns, and also, again, help you to avoid trading emotionally. If you're a beginner and you're interested in Bitcoin, if you're not, that's cool. That's totally up to you. If you are and you want a little head start, then Coinbase is still offering a special where you can earn $10 of free Bitcoin, get you started. If you buy $100, then they let you earn an extra 10 on top of that. So pretty good return right off of the bat. And that's offered by them, not me. So depending on when you watch this video, it may or may not still be available. Also make sure that you read all the disclaimers, which countries it's available in, all that stuff. That's on their website. There's a link to it up in the right-hand corner. Oh, I do want to fully disclose, to be completely transparent, that if you do take up their offer, then you'll get $10 of Bitcoin and I'll get $10 of Bitcoin as well. So that's the way that they do it. And not that I really need $10, but hey, anyway, that's the deal. But if you're just starting out and you're a beginner, it's a nice thing to add a little padding to your account, and it's a pretty good deal. And that's the exchange that I use. Well, one of the exchanges that I use. So and a large volume of Bitcoin actually is traded through them. And remember, the CBOE, they launched Bitcoin yesterday, the 10th. CME, they launch their futures contract next week, but you're not actually owning Bitcoin when you trade the futures. So keep that in mind. You are trading a futures contract, not actually owning Bitcoin itself. So that's a distinction to keep clear. If you want to own Bitcoin, then you've got to go to a company like Coinbase or one of the others.